Welcome back, and you are watching Market Fatafat on ET. Now let's get started with all the stocks that are buzzing in trade today on the back of News Plus or on the back of technicals. On the technicals today, we have Neerav Chedda joining you with us this afternoon, while from the research team we have Harsh as well as Ashesha joining you with us. A very good afternoon to all three of you all, and let me start with the first stock that is in focus, and we'll be talking about Cipla. Now this stock is in focus on the back of a note that we have coming in from Jefferies, where they're maintaining a hold rating with a target price of 900 rupees per share. What Jefferies also highlights that there's a considerable stock moving news on Cipla that is expected to be coming over the next few days as well. Obviously Q4 results, they are expecting that to be quite strong. That will be on 12th of May. Commentary for the approval of the Advair approval from the US FDA classification of the Indore plant in the second or third week of May is what they're expecting, and that is keenly awaited as well. And if this classification is favorable, the stock may see a rally, and they're expecting a bull case of up to around 1095 for Cipla as well. So let's keep an eye out on that one. That's the word coming in from Cipla on Cipla from Jefferies.
All right, moving on then, let's talk about Sasken Tech. That particular counter is in focus. If you look at the revenue, they've declined by about 5.8%, coming in at around 103 crore rupees. If you look at the EBITDA margin, substantially lower on a quarter-on-quarter basis, 13.8% versus 28.4%. I'm sorry, that's YOY. Also, the profit also has seen a decline by 36.5%. coming in at 17 crore rupees. If you look at the company, they have declared a 13 rupees dividend as well. But however, on the back of that blip coming in for their numbers on a YOY basis, you can see the stock falling.
Okay, let's move on. And Neerav, your first stock, we'll talk about HSCL. How are the charts looking like for this one? What is the target that you're keeping an eye out on? And obviously, is this a buy call firstly? I want to know.
Yes, good afternoon everyone. Thanks for having me again. Himadri Specialty, HSCL, looks very good on the charts. A long breakout has come in above the 110 levels for the stock. That level was a very important resistance area. So this stock, after hitting 110, consolidated for about 3-4 months, and then finally today that breakout of 110 has come in. I believe the stock can go up towards that 135, 140 levels from here on. So look to add the stock at current levels. You can keep a stop loss of around 105 for your longs and expect anywhere in between 135, 140 to come in soon.
All right, moving on then, Harsh, let's talk about Fino Payments. This one reacting on earnings.
Yes, absolutely, Cheryl. So we saw interest income more than double for Fino Payments from the 12.5 crore mark. It's gone up to 29.5 crore on a year-on-year basis. NII, though not as much, up around 15.1 crore versus the 8.1 crore number it clocked same time last year. So nearly doubling there. Other income, which is the larger component of on the income side for Fino, has not done extraordinarily well. It's up around 8 to 9%. From 272 crore, it's up to 294 crore. EBITDA was up a solid 46% year on year, and margins have expanded by around 3%. Profitability, of course, this is one of the few profitable fintech startups, and PAT came in at 22 crore versus 17.5 crore mark, up 25% year on year. Even sequentially, we saw a jump of 16%. Management has guided for certain benchmarks that they plan to fulfill by FY26. They're expecting a growth CAGR of 20% across the board. EBITDA margins at 15%, PAT margin at 20%. PAT margin at 10% and ROEs of 20%. That's what they're guiding for. The stock, which was up around 4%, has come off, up 1.5% as we speak.
Okay, let's move on and actually just look at the numbers of Jyothy Labs. They're flashing on your screens as well. We're seeing a strong growth coming in terms of revenues. Revenues at 617 crores versus 547 crores. Stock is up and we've seen a sharp spike coming in the stock, up 2.5% as of now. Profitability of the company also 36 crores is what it was last year, and now it's become almost 60 crores, so almost doubling in terms of the profits of the company as well. Let's keep an eye out on that. We'll wait out for the margin number as well, but surely seems like, you know, the street is giving Jyothy Labs a thumbs up as of now, Cheryl.
All right, that's Jyothy Labs for you, reacting on those numbers. But Ashesha, Uja Cement, this one also seems to be reacting on numbers, is it?
Well, Yes, absolutely. And the stock is reacting negatively. The stock is declining nearly 3.5% as we speak. Numbers, although on a year-on-year basis, they look pretty strong. They are well below what the street was working with. As far as revenues are concerned, they've seen an uptick of about 8.5% on a year-on-year basis. Margins, meanwhile, have contracted this quarter. They've come in at 18.5% in the quarter gone by versus margins of 20.2% that the company reported same time last year. Sales volume growth has come in at 3%. This was driven by strong demand with focus on micro markets. In fact, we also have a brokerage note that has come in. JP Morgan has maintained its neutral stance on the stock, but they've gone ahead and cut their target price to 385 rupees per share from their earlier target of 405. They say it was a weak and noisy quarter. Weaker pricing and loss of volumes in fact impacted fourth quarter. So although numbers look good on a year-on-year basis, brokerages are not very happy with the kind of numbers the stock has reported, and that is the reason the stock is declining in trade today.
All right, let's shift focus then and let's put the spotlight on Manappuram Finance. A short while ago, you saw the bottom flash coming in on the stock. It has fallen approximately excess of about 10% as we speak. That is Manappuram Finance for you. As you can see, the stock is under immense pressure in today's trading session, and one of the reasons why the stock is actually falling in trade is the fact that what sources have told ET now is that the Enforcement Directorate was carrying out searches at Thrissur, and this are the premises linked to Manappuram Finance and its promoters, as well as they were conducting searches at the headquarters. Not just that, they've also conducted searches at the promoter VP Nandakumar's premises. They've also carried out searches at multiple locations linked to Manappuram Finance Group. There are allegations that VP Nandakumar illegally collected over 100 crore rupees from gullible customers without taking prior permission from RBI. Remember, all these informations are as per sources. Also, what we picked up from the sources is that it's also alleged that Manappuram Finance did not follow KYC form norms. So on back of this particular development that we've picked up from the sources, the Enforcement Directorate is conducting searches at multiple locations linked to Manappuram Finance as well as its promoters. You can see the stock that is under pressure, 10.4% as we speak right now.
Okay, let's move on and talk about some of the IT names coming in. Morgan Stanley has come out with a note on the IT sector. Obviously, weak Q4 and conservative FY24 outlook that has played out for the leading cuts in estimates that we've seen for most of these IT companies. Now, mainly the reasons that are actually there and coming in for IT companies, the 5 top reasons that Morgan Stanley has given is one, potential US soft landing. Other than that, public cloud cycle with room to run a margin gains in FY24 for estimate is something that we're keeping an eye out on. Reasonable relative valuation is there as well, and the stock is bottom ahead of the growth through as well. So let's keep an eye out on that. As of now, you're seeing LTI Mindtree as well as Infosys reacting in trade. Not much of an excitement there, down almost 1%.
All right, moving on then from the IT pack, let's talk about KEI Industries. Harsh, how are the numbers?
Table set, Cheryl. So we saw revenue which was up around 9.5% on a year-on-year basis. That's come in at 1,954 crore. We saw EBITDA rise by around 12%, so slightly more. So in fact, we've seen EBITDA margins also rise. But before that, the EBITDA has come in above that 200 crore mark, 204 crore nearly, versus the 182 crore same time last year. And we saw margins go up by around 20 bips on a year-on-year basis. From 10.2, they expanded to 10.4. Profits too were up 7.5% on a year-on-year basis. Net profit came in at around 13.8 crore versus that 12.9 crore number same time last year. Stable set, but despite that, you can see a declining trend line. In fact, the stock, clearly at the day's low as we speak, down 2.3%.
That is KEI Industries for you. Earnings galore. Flashing on the bottom of your screen is Havells India. If you look at the profit, it's come in almost flat compared on a year-on-year basis, 358 crore rupees versus 352 crore rupees. If you look at the revenue, it's come in a tad bit higher compared to last year, 4,859 versus 4,400 odd crore rupees. And as you can see on your screens, the stock price of Havells still holding on to the positive territory, 1.7% uptick for that particular count. Vinny, what are we rather expecting for Havells? What sort of an outlook did we have for this one?
So we were expecting a decent number coming in from Havells as well. Let's not forget Lloyd's does, it's summer season for Lloyd's. So that could be something that would work out for Havells as well. That is the number that we'll be watching out for. I'll have to look into that. But that is something that always supports the growth for Havells in Q4 and Q1 when you see the Lloyd side of the business. So obviously, and let's not forget commodity prices have started cooling off as well. So in terms of that could support the margins going forward as well.
All right, we'll wait for finer details to come in on Havells. For now, you have the pattern, the revenue numbers featuring on your screen. The stock is holding on to the positive territory, still holding on to gains of about 1.5% as we speak. But the ones that are not holding on to gains, or rather slipping in trade today, are definitely have to be banks that have exposure to basically Go First. Remember, Go First owes 6,521 crore dues to our Bank of Baroda, IDBI Bank, Axis Bank and others as well. Remember, the airline has said that it's not defaulted on any of these loans as of end of April. This is what the company said in a filing to the NCLT, remember. But they've also said that they have filed in NCLT not for bankruptcy but to actually go ahead and revive the airline. Central Bank of India, Bank of Baroda have an exposure of about 1,300 crore rupees under a consortium loan, while IDBI Bank has a smaller exposure of about 50 crore rupees. So watch out for all of these banking counters on back of what is happening with Go First, and not just though banking counters. Watch out for Bombay Burma as well as Bombay Dyeing. Both of these companies are also under immense pressure. Look at Bombay Burma. It's seen a decline of excess of about 10% in today's trading session. And right now, it's actually kind of come off those levels, but highest intraday percentage loss since February 2022. Go First, remember, which has filed for bankruptcy or rather for revival to NCLT as they're terming it, availed a loan from Bombay Burma in the form of intercorporate deposits. This is what they said in the insolvency filing. Also, the loan amount is yet to be ascertained. If today's losses hold for Bombay Burma, it has actually snapped a 4-day gaining streak. So all of these counters are in focus on what is happening with Go First, but that's just not all, isn't it?
Absolutely, and let's just talk about Indigo as well, because that is in focus while it's one man's loss, another man's gain, is what you say. So Indigo obviously is in focus on the back of this news flow as well. But Indigo also has a note coming in from Macquarie, I beg your pardon, where they're highlighting that they're maintaining an outperform rating and given a target price of actually 2,600 rupees for Indigo as well. They believe that the market is moving mainly towards a duopoly structure, and higher yields is something that will continue for Indigo. Incumbent Indigo should actually benefit from this news flow as well, and obviously compared to Jet, expect a lesser impact given Go First is on a smaller scale as well. But yes, nonetheless, we'll be seeing some benefit there, and obviously as of now, sentimentally, we're seeing Indigo is up as well.
All right, that is Indigo for you. One man's loss is another man's gain. But earlier in the day, we spoke exclusively with the Go Airline CEO, Kaushik Khona, to talk about the loans that the airline has and also the plans going ahead. Remember, this development has spooked lenders, and not only lenders, also passengers. So let's listen in what he has to say.
Well, I think it's all the bank loans are not only secured by the company assets, but I think what is more relevant, and I think the bankers are very comfortable, is that they have a collateral over and above the company assets, collateral in the form of unencumbered land of more than 94 acres in a prime. Major bank loans are, I would say, almost all bank loans except for the ECLGS, they are all working capital facilities. There is only the interest which is to be funded or which is to be serviced every month. So there is repayment pressure is very limited. The repayment is only in respect of the ECLGS, and that is also has a moratorium of 2 years, and balance repayment has to be done in 4 years. So the presently monthly repayment is only in the range of around 50 lakhs, 60 lakhs. So first of all, the repayment pressure is not significant.
Okay, let's move on and shift gears and actually talk about Federal Bank on the charts. Neera, what is your expectation here?
Definitely, a lot of banks are down today, obviously because of Go First, but there are some pockets where a lot of value is still left. I believe Federal Bank, for that matter, looks very good. Very similar pattern to Himadri. flag kind of a formation breakout has come in around that 135 odd levels for the stock, and very likely the stock is now going to go up toward that 165, 170 odd zone. So look to buy from for that target from at current levels with a stop loss of around 132. And go long. Even if it comes down, go long. It's a beautiful pattern. Lot of longs built into the system.
All right, so that's the take coming in on Federal Bank by Shesha, some earnings, Aztec Life.
This counter is reacting negatively to the kind of numbers that it has reported. It has recovered from the lowest point of the day, but despite that, it is holding on with a cut of nearly 3.5%. This company has reported its first ever quarterly loss in the last 15 quarters. Revenues for the quarter gone by saw a decline of about 53%, and EBITDA was down nearly 92% on a sequential basis. Sharp decline in product prices and high channel inventory is the primary reason why the company has reported weak set of numbers. As far as the outlook is concerned, management says that enterprise segment could remain under pressure in the first quarter of FY24 as well, and they say CRAM segment could do better, and incremental capex has been deployed for this particular segment. So on the back of weak set of numbers that the company has reported, the stock is under pressure today.
Harsh, and Punjab and Sind Bank also in focus on the back of its numbers?
Absolutely, Vinny. So we saw a very flat set coming in from Punjab and Sind, except for a couple of one-offs. Let me take you through those. So net interest income was in fact lower by 15% on a sequential basis, down 2% year on year as well. It's come in at 684 crore. Non-interest income really pushing the baton of operating profit for the company. Non-interest income came in at 547 crore versus the 215 crore same time last year, and that steep rise was largely on the back of certain recoveries in written off accounts of around 404 crore. So that aided operating profit. Operating profit was up 69% year on year, and provisions were largely flat. And what we also saw, profit after tax was up 32% as a result of that. So that was the positive on Punjab and Sind. But otherwise, in an environment where rates are going up, NII has actually fallen, which is a bit of a problem, and which is what is reflecting on the stock as well. The stock under pressure, down 6%.
Punjab and Sind Bank for you. But Nirav, let's talk about Biocon. Looks like the tide is turning in favor of Biocon of late. You've seen a lot of positive news flow supporting the counter, but on the charts you see that will also support?
Yeah, so I think, ever since I spoke about Biocon about a couple of weeks back on your show, this stock is doing well. I expect it to do much better. It can go up towards that 270 to 80 odd levels. So look to buy the stock at current level. The reversal is in place. A lot of volumes have taken shape around that 200 to 20 odd levels. Breakout is in place as well. So I believe this is one stock which should do very well going forward. So look to buy it at current levels. 230 should be a stop loss, and around 270, 275 should be the immediate target.
Moving on, then let's talk about Vedant Fashion then, and this one has seen a good uptick earlier in the day, and this is on back of what the analysts had to say about the company. Right now, as you can see, the stock is trading absolutely flat, giving up all of those morning gains. But what we were picking up from brokerages was several brokerages actually reiterated a buy stance on the company, citing healthy Q4 earnings and potential rise in profitability. Remember, the company had seen a rise in their consolidated net profit in their numbers. But if also the rise in store additions, the cost optimization, that is what aided the March quarter. This is what Motilal Oswal had to say. Strong margins, healthy return profile and expansion focus to drive the strong cash generation is also what the brokerage had to say on Vedant Fashion. While Antique Stockbroking also had termed the Q4 performance as decent, and ICICI Securities had cited impressive store sales growth. So all of these counters were giving their thumbs up to Vedant Fashion. The stock was trading high in excess of about 2%. Now giving up all of those gains, as you can see on your screen, a sharp dip coming in from the day's highest point. The stock is now trading negative with, stock is now trading flat with a negative bias.
Okay, let's move on then and talk about Deepak Nitrite on the charts. Nirav, this one has been buzzing in trade for the last 1 month, surely picked up pace. So is this the right time to pick this one now?
Yeah, so this stock, ever since it hit 3,000, a couple of years back, in 2021. This stock is in consolidation post that. I think the consolidation period is over now for this stock. The volumes had dried up and now they are picking up steam. A lot of shorts were built into the system. They are exiting. So that's a good sign. Short covering along with a reversal is very good for this particular stock. It can go up towards that 2200 to 2350 odd levels. So look to buy for that target at this point of time from with a stop loss of around 1860. This stock can do pretty well in the next couple of trading sessions.
All right, Harsh, Spandana Sphoorty, another earnings candidate.
Absolutely, and a solid set, Cheryl, and you can see the result on the stock price as well. Revenue is at 498 crore versus 287 crore. Total income also has expanded, 533 versus 375, very impressive, up 42% year on year. Net interest income saw growth of 51% sequentially, so very solid number there. Operating profit was up 85% year on year, and we saw PAT also expand solidly from 71 crore to 105 crore year on year, sequentially, and in fact jumping almost fourfold on a year on year basis. So we're seeing very solid numbers there. Disbursement growth is also quite strong. We're seeing disbursements grow at nearly 30% sequentially. So they're pushing out loans quite well. NPA ratios are in withdrawal mode. They're improving quite sharply. So all trends pointing to a recovery there. Collection efficiency looking extremely stable. The gross collection efficiency was at 103%. Of course, that judges the amount of collections against the loans that the NBFC is making, and net collection efficiency has improved by 3 to 4%, now at 98%. So all those positives playing out, plus a 4,000 crore fundraise also in process, and the stock is up and away.
Okay, let's move on. And Ashesha, IndoStar Capital, what's the news flow here today?
Well, yes, the stock is locked in lower circuit today, and that is because promoters are intending to offload their stake in the company. The offer for sale will be open for non-retail shareholders today and for retail shareholders tomorrow. They are intending to sell about 14.2% stake in the company, and the floor price has been fixed at 95 rupees per share, which is a discount of about 23% to yesterday's closing price. So on account of this offer for sale news that has come in, the stock is declining in trade today.
Moving on, Nirav, how is GNFC looking on the charts to you?
So, I don't know about the sector, but I have a thesis about the PSU stocks. Most of that PSU stocks, if you see in the last couple of months, have witnessed a lot of short covering. The positions have become lighter, and now there is good space to get longs into the system. So a lot of them have moved up, which are not in the FNO space, and there are some like GNFC which are now likely to move up. A long consolidation from 900 odd to about 500. The stock has seen, and finally a breakout has come in around this 580 odd levels for this stock. Also, volumes have risen. Open interest on the long side a little bit have been added, but there is scope for much more. So I believe this stock can move up very aggressively along with the other PSU stocks, with next year again being the election year, so that would also impact. So I believe this stock can move up towards that 700, 720 odd levels with 565 as a stop loss.
Let's move on and talk about Bharat Forge and GNA Axles. Both these are in focus because we had the April Class 8 truck orders that have come in, the numbers for that. Now, overall, when you're seeing in terms of the Class 8 truck orders for April, the orders were weaker than expected. April orders were at 11,600 units, down 27% YOY, and on a month-on-month basis also down 39%. The recent turmoil in the banking sector is likely to have tightened the credit conditions for some industry participants, is what we're understanding, as well as given the robust Class 8 orders into the year and ensuing the backlog support as well as the normal monsoon order patterns. Orders were expected to be moderate in Q2, moderate into Q2 as well. So that's the reason we're seeing a fall in both these Bharat Forge as well as GNXL. Both the stocks are down today in trade.
All right, moving on, Nirav, let's talk about Oracle Financial Services or other Oracle Services. How is this one looking on the charts to you?
This stock was making new highs. In fact, it started coming down when others were making new highs in the sector. It again witnessed about a year and a half of consolidation, and while the others in the sector are still near their lows or making their lows, this stock has started to move up from its lows. So it's already about 20-25% up from its lows. A good rounding kind of a formation is being made in this stock, which is very positive. So I believe this stock will now start to make a higher top, higher bottom formation. It's already started that in the longer term charts. It can go up towards 4200 to 4500 odd levels. So one can look to buy this stock at current levels. 3450 should be the stop loss on a trailing basis, and the overall pattern looks very good. So the others in the IT space will follow suit probably a couple of months from now.
Okay, that was stock number 21, and that was the last stock for today. Thank you so much, Neera, Ashesha, as well as Harsh for joining in with us. And thank you so much, viewers, for tuning in to ET Now. It's a goodbye from Cheryl, myself, as well as the team who put the show together.